start to run, and being afraid that you're going to miss your move, you jump in and buy at the market, only to see 15, 20 minutes later, the market goes right back down, maybe even down on the day, to the number you had in mind originally, but you were afraid to wait because you were going to miss the trade. You have to wait. You have to trade at your own exact support and resistance levels, because that's the only place where you can define your risk with a very low tolerance and probably use a 1% stop. Let's look at a couple of charts to demonstrate some of these things to see what I mean. Here's a short-term 5-minute chart, and it's almost the ideal setup for a bond. Now we see we put on a 45-degree trending angle coming down from the top. And this is a true 45. Here's an actual degree. And we put on some retracements after we have identified the low bar of the move and it started up. We can find out our high of the low bar is right in here. Now we wouldn't necessarily take that because we wouldn't know it was guaranteed to be the low bar. Maybe we'd go a little bit above it and go plunging right back down the next day. But once we saw it, we could put on our range. We would know where the 50% might be. And after a day or two up, or in this case a 5-minute bar or so, it would be a couple of bars up, and it would pull back and have a tendency to pull back and rest on the high of the low bar. And it could still be above the 45. So at this point, we want to think about our entry. So as soon as we see it repulse off of here at the high of the low bar, we know it's been a successful test. So here's the wide-ranging big bar, and as it closes towards the top of that, we'd like to get long here. And this we see there is another big ranging bar, and at that point we can put a stop in either at the 1/2 of that, or at the low of the extreme test so far. But at that point we have a very good chance that it's going to go higher. So that's on a short-term basis. On perhaps a longer-term basis, I say safe buys of swing trades. This would be if you're really looking to buy a stock or an index and hold it for 2 or 3 weeks, let's say. So we would have previously looked for measured moves of a certain amount. Once the measured move was about the same amount, and by the way here too, this is a test of the prior buy signal. See the high of the low bar? Usually when you have a test in an uptrend, you will go to the high of the previous low bar. Even over in here in this correction, we came down to the high of the low bar. These are all confirmations that you're still in an uptrend. This plunge here almost got to the high of the low bar. This plunge here got to the high of the low bar. So that's a very good confirmation that on the eventual pullbacks, you will get to the high of the low bars, and that's a place to look for another reversal. So down in here, we can identify the low bar, either this one or this little tiny one. We're looking to see how it goes up after that. We do, on the third bar here, have a wide-ranging bar and close at the extreme high. Now at this point, since there is a 45 coming down off the top, it may just hit its head right here, and it only barely got back to a previous breakdown level. So this would not really be a safe buy here because it could fail. But if it gets through the 45 at that point, you would have to go long, and then you could put a stop back under the 45. And here it goes on up, and if you had to stop here for a while, you might be in this trade for quite some time. Same thing happens on here. Once we identify the low bar, they creep a little bit, and this is kind of a danger sign usually that they barely overlap the high of the low bar. When they have no momentum and they overlap, it's very dangerous. You could still be in a big, powerful downtrend, and also the momentum of this downtrend takes a commensurate base of accumulation again to have enough energy to go up. And so there are angles, steep angles, maybe a 4x1 and a 2x1, and then the 45. Some of these steeper angles should be breaking before you get enough impulse wave to move up. So after several days, and by the way, that when these pulled back, they only came to the midpoint of our low bar. So that's at least a positive sign. It's creeping up. And then we get a big bar breakaway here. So you could be thinking about going long here, but again, it would be safer if you wait for them to actually break out above the 45. At any point after that, you could buy any dip as long as they didn't break back under the 45. And so this would be for long-term swing trades. Same thing is true at the top. After you've been going up and going up, you identify the high bar. The sell signal is coming in at the low of the high bar. But you want to make certain that it's not just going to go down for a day or two like it did over here and then go right back up again. So after it goes down, it bounces off the 45-degree angle from the last low. It comes up here and tests the low of the high bar, starts to break down, then it breaks through the 45 on a wide-ranging bar. And as it breaks through there, the ideal place to go short really is down here or on the break of the 45. And at that point, you can have a stop right on your 45, and there should be follow-through when they should break down at that point. Let's look at a couple of shorter time frame examples here. Here's a daily chart of a Dell, and we've been in a downtrend, and we see the last downtrend here goes down. I've just put a 45-degree angle on here just to keep us honest. And we've identified the low of the move, and here's the high of the low bar, and there's just a tiny little overlap for a while. And it keeps plunging down. So you really don't want to fool with this yet. It's too close to taking out these lows, but once we identify it, we get a bigger bar or two up away from it. Any kind of a pullback then that tests the high of the low bar and bounces off is where we want to look to go long. So we could be looking for a wide-ranging bar to go long in here, and because there was already a successful test, and you would have regained a prior high test right here. But since you're so close to the 45, you may even want to wait to see how it reacts to that 45. But certainly going through it, you would want to be long. And then at that point, you could have a trailing stop either at the last test successful low or just under your 45 until you pick up, a week or two into the move. And then I would start raising my stop to each of the prior lows. And as a general rule, you'll follow this 45-degree angle. There'll be some little breakdowns along the way, and I wouldn't necessarily have my stop exactly on a 45, but just keeping you honest with the trend, that since the trend is up, there will be these normal measured move breakdowns like we saw here, and these can be adjusted for. And we'll also see that each swing, the 50% of that swing is about where they pull back to. So as long as there's not much more damage than that, and you're a long-term trader holding things for 6 weeks or so, you may want to stay in this position. But how do we know how far this thing can go from just that information? Well, there's also another thing we could do here is if we have a buy signal, we can also take the last swing down and use the secret angle method. So here's the secret angle, first angle, and immediately upon seeing the high of the low bar exceeded at this point, we want to make an estimate of where it can go to. So we put in our 1/2 angle, and we divide that into segments, and so we find 50% of that is right here, and it can probably go to this level anyway. So if we're above here, we get a wide-ranging bar. Usually if it's strong enough to cross the 50% of the secret angle, I'll go long here with a stop just under that. And it will usually continue on up to here, and depending on the momentum, I'll either sell out the long here and look for another pullback, or in this case, it was just a very strong momentum move. I would look for a consolidation at this level because it would mean that we were going to take out these last highs over here and go a lot higher. So you can use the secret angle as a method too to define the acceleration points after you see a high of the low bar buy signal. Sometimes you don't know if the low has really been in. If you get a little waterfall arc with a big bar down like this, when you get big bars, it takes a lot of momentum trading on the side before you escape from these steep angles and go up. So often I'll put on a secret angle anyway. One thing I might add is one of the beauties of the secret angle method is that immediately upon hitting a spike low, even if you're only 1 minute into it, you can make an assumption that that was a low, and if true, where would they go to? So often I will put on the angle and the 1/2 angle, knowing that if they ricochet off that level and bounce very quickly, especially if you're trading E-minis on a 5-minute basis, you often get volatility like that. I will know that this target area up here at the 1/2 angle is where they're going, and they'll probably certainly get to the 50% between those angles. And that's what happens here. It went to the 50%, and it kind of consolidated for a little while because of the steepness of the decline. Then it gapped open and got right to the angle, didn't come down very much, and went up through here. And in this case, it was kind of a false breakout. Usually when they go through here, they do indeed take out the high. But in this case, if you note, they just got back to where they broke from. There's a big waterfall decline. So usually there would be extreme resistance in this area and once they filled this gap over here. So you still want to be aware of horizontal support and resistance where old lows become future highs, at least on the first test up. So when this one failed, now we don't know what is the real trend. Is the trend up? Is it going to make a higher bottom over here and go up? Or is the trend still down? It's just going to go down and down. So now I can make an assumption that, well, maybe this was our final low and we're in an uptrend. So let's put our secret angle on here and see how far down they can go. So then I'll put a 1/2 angle on here, and I'll take between that the midpoints. So it immediately comes down, goes under the midpoint, which is a little bearish. So that means it's going to test the angle, and it goes to the angle and breaks. But so far it holds the bullish trend line. Remember, in a bull trend, it will never break down below this angle, whereas in the uptrend, it should never really break above the angle. So at this point, we're still uncertain. But what we do know is here's the 50% of the first angle, which is right here. It coincides with the 1/2 angle down the top is right here. And we're holding the bullish from the bottom. So should we get to this level again through here, I would definitely be going long and looking for him to go up into this area and probably have another leg up. Here's another short little 5-minute chart, and often I'll use the secret angle method just to test the water. This is clearly a downtrend. There's little triangles here that keep breaking down and breaking down. I would not normally think this is a low simply because there was a big base here and it broke. So unless this was a false bottom that immediately regained this level, normally they just rally up 50% and break down again. But to find out where could it go if it did even have a rally, I could throw a secret angle on here, put the 1/2 of that angle on, put in my 50% and my maximum expected rally point. So then that's what we see here. It goes up, it respects the 50% angle coming down, it plunges to the low, holds it, gets up one more time here. Not only it gets the double top, but it gets to the secret angle point, and then it breaks to another new low. Now I could try it again. This one has a little better chance of being a low, simply because we have more of a base. If you have more of a base, you have room for some of the steeper angles to be done with an 8x1, a 4x1, a 1x1, and you have a tendency to build a base. So in here, it's more realistic that there might be a base, so I'll put in a secret angle here at the low of the high bar again. This is the identified low of the move so far. There's the high, and it gapped up through it, as you see. So it is respecting this and giving you the potential of an uptrend. So if this is going to be an uptrend, I'll put on the secret angle, I'll slap on the 1/2 of that angle, and I'll find where it can go to, both an absolute and also the 50% retracement. And if I wanted to, what I've done again here is I subdivided this to get the most minor points. So it went to the 25% of the whole range, or 50 of the 50 here. And it's resting. So this shows me that there is some strength. It's at least going to get up to here and test the secret angle, which is what it does. Getting above here, there's a chance it will go to the high. But the fact that it doesn't, and it keeps probing this and probing this and probing this, is usually a sign it's not going to make it. And then as soon as it starts to break down here, we know where it's going from. So I can make an estimate too. Even before I hit this bottom, I can say, okay, where could they rally on me if I'm short? And so I'll have a rough idea that there'll be an angle of this particular slope coming down, and I can adjust it. I can make this a little bit steeper to get caught up and make this a little bit steeper. And that will show me approximately on a 5-minute basis what kind of spike I could expect if I'm short.